market news now. Asian stocks edged towards a weekly loss and the dollar was headed for a month of gains after U.S. inflation came in steady. In company news, Alibaba returned to growth across all its main divisions, defying China's economic turbulence to take a first step towards a long-awaited comeback after more than a year of malice. China's online shopping leader, which is also a proxy for the country's consumer demand, reported a better than expected 14% rise in revenue during a quarter when China struggled to gain momentum after years of COVID-0 restrictions. Its shares rose as much as 3.9% in Hong Kong. To talk to us about the latest and look back at the week, we are joined by Thato Mashego, who's a portfolio manager at Sanlam Private Wealth. Thato, thank you so much for your time. I mean, as you look at, global and local markets sentiment, what is the day-to-day data points telling us about where we are right now in the market?
Well, good afternoon, Anastasia. I think the market at the moment is relatively cautious, and this is due to investors downgrading their expectations with regard to monetary policy in the US, following obviously the US CPI print that came through recently. And any hopes of a potential cut, I think, have been dashed with the data that we saw and subsequent commentary from some Fed officials in terms of the fight against inflation. So we've seen quite a bit of equity outflows so far this week in terms of global equity funds and inflows into money market and bond funds. And the dollar has strengthened as well, which does suggest a bit of repositioning from investors as they try to digest how the outlook is going to be going forward.
So as I mentioned, CPI coming in as expected within line when it comes to estimates. What does it mean now for the Fed that has shifted to become more data dependent, or is it too early to tell?
Well, I think the data suggests that inflation remains persistent, which is, I think, to the disappointment of many market participants who were hoping for a positive surprise from the print yesterday. So overall, 3.2%, a slight uptick from the 3% of the prior month. However, core CPI remains quite persistent at 4.7%. And if we look at underlying food, slightly higher at 4.9%, and that's been consistent for some time, including groceries and restaurants. And most of the underlying line items within the CPI data are still somewhat above the Fed's long-term target of 2%. It's only energy which showed a large decline of around 12.5%. But we know, obviously, energy can change quite dramatically with production cuts or with a slight uptick in demand. So overall, it just seems that there's still persistence within a lot of the underlying categories, from higher mortgage rates and rentals, logistics prices, so on and so forth. And so this does suggest that the Fed will have to remain hawkish, especially if, as they reiterated, they want inflation to get back down to 2%, which means we cannot expect any rate cuts anytime soon. And so those potential cuts are being pushed out further, perhaps from Q1 next year to Q2 next year, which still maybe are somewhat on the optimistic side.
All right, so let's stay stateside right now. Given everything what we're seeing, that we're seeing on the markets, is there value to be found outside of the tech frenzy, i.e. perhaps much cheaper stocks that may offer value?
Well, there definitely is, if one is looking from a pure valuation perspective. I think we all know that year-to-date S&P returns have been driven by the large tech counters, and when one strips that out, the market performance has been a lot more muted. And this does speak to the increasing concentration of some of the major global equity indices, which are becoming global tech indices in a sense. And so if one were to look at, for instance, the Wilshire 500 or the Russell 3000, One popular metric being the buffered ratio of GDP versus market cap of the broader indices, and that has come down quite significantly, a lot more than in the S&P forward earnings multiple. So this suggests that there is, at least from a purely valuation perspective, from your starting point, you are entering in at a lower base. And hopefully, if there is recovery in the economy over the next few years, then there may perhaps be returns to be had from there. However, one caveat would be that we've seen quite a bit of earnings downgrades over the past 12 months. So this does suggest that the broader market is a bit under pressure. And while margins overall in the big companies have been maintained, in some of the smaller companies, not so much. So one has to, I think, be quite specific and picky in terms of the underlying sectors and potential companies that can make it through an environment where consumers are down trading, where disposable income is shrinking. So it becomes a stock picker's market, so to speak.
As we wrap up the week, any events that you're paying attention to or company news going into next week?
Well, I think the broader outlook for both the US and China is something that the markets are quite concerned of. And we have seen a bit of disappointing data on both fronts. If one looks at the US fiscal deficit, which came in at 1.6 trillion for the year to date so far, for the 10 months of this fiscal year, you're seeing that government spending has increased 10% year on year, whereas government tax receipts from personal income tax and company tax has declined by 10%. And this is leading to additional borrowing, which leads to higher borrowing costs, higher cost of capital, and that eventually leads to lower equity returns. So that is a bit of a concern in terms of the trajectory of the US fiscal balance sheet. And similarly in China, the local government debt situation is quite severe, and we're seeing the government trying to deal with the off-balance sheet funding vehicles. And that obviously could lead to a restructuring of debt, which obviously impacts the economic situation in China. I guess from somewhat of a micro perspective, you mentioned Alibaba, that is positive. So one would like to see if we see a similar bounce from some of the other internet names. The private property developers under significant stress, Country Garden at the moment in China, potentially facing a default on the large top tier private developers. So these are some of the concerning pictures that investors are looking at. UK GDP just came out earlier and very muted.
Right.
I see we may be out of time, but yeah, overall, some negative sentiment that the market is seeing. Yeah.
All right, Thato, let's leave it there. Thank you so much for your time. That is Thato Mashego, who's a portfolio manager at Sanlam Private Wealth. Let's take a quick break. When we come back, we'll have a look at SME on Point. Stay tuned.